A very interesting note coming in from CLSA as far as the entire India cement sector is concerned. Now remember, CLSA as well as other brokerages have noted with a bit of surprise, but they've been quite optimistic as far as the future outlook of the sector is concerned. Most of the brokerages, most of the analysts as well as market participants were quite sure that the entire cement space would actually would take quite a bit of a tumble in terms of prices as well as demand in FY21. But what has surprised everyone positively has been the kind of resilience, number one, the demand has seen, especially in terms of government infrastructure projects, and number two, there has been a revival as far as the individual home building is concerned as well. Also, what has been quite surprising has been the fact that prices have remained very resilient despite multiple lockdowns or multiple disruptions as far as activity is concerned. Now, in the backdrop of that, CLSA has written a note on the entire cement space where they believe that the sector is poised to grow quite well, and they have upgraded their target price and ratings as well as far as some of the stocks are concerned. Now, number one, what they've done is they've increased their rating, or they've upgraded their stock rating on ACC from an underperform to an outperform, and also has increased the target price to 2,190 from 2,080 rupees a share. Now, when it comes to the entire cement space, what CLSA has to say is quite interesting. They are expecting the cement sector EBITDA to grow at a rate of 15% CAGR over FY21 to FY24. They are expecting the volume growth CAGR at 9% and the profitability growth CAGR of 5% over the same time period, and they believe that this is what will actually ensure the entire profitability and well as EBITDA to actually grow significantly over FY21 to FY24. In terms of what exactly they are expecting in terms of the capacity utilization, they are expecting capacity utilization to rise to 71% by FY24 from 63% in FY21. They are expecting the rise in cement prices will most likely support EBITDA margins going forward. Also remember, the company CLSA says companies are likely to see and likely to find it tough to see further re-rating, given the fact that already cement prices indicate very strong valuations being built in. Valuations for the sector are much above what the historical 5-year median is. They are expecting a demand growth of 10% on a year-on-year basis in FY22 on a low base in FY21. FY23 demand they expect to normalize before again picking up in FY24, as FY24 is a pre-election year, which indicates that there could be some spending coming in as far as infra projects are concerned. CLSA is quite optimistic that the individual home building as well as infra activity will continue to remain quite strong and resilient, and what they say is that cement prices have undertaken consecutive price hikes in the month of March, April as well as May, and they believe that this is something that augurs quite well as far as the prospects of the entire sector is concerned.